Hey, this is Jack from Alpha Charts with a state of the market video. Today is August 27th, 2022. Before we get started, this video is for informational purposes only. These are not recommendations to buy, sell, or hold any stock or security. Now, you may hold positions in some of the equities mentioned. Know your time frame and risk tolerance. Also, if you haven't done it yet, I am a super follow on Twitter. It's a pretty awesome program. I'll give you the quick rundown, 1 minute. Every Saturday I give a special setups, stocks to watch, very expanded, usually 50 to 60 names of just really the best names out there. Sunday, I do a market note. I do also my long view video every other week. I do scans every week, every day of the week for my super follows. I do a midweek video. I do again market notes on Sunday and on Thursday to keep everybody on the right side of the market. The whole goal is one, to manage risk, but also to keep everybody in the right universe of stocks. And I think that if we're in find relative strength. So if we can do those three things, right? Relative strength in the right universe of stocks, right? What's going up, and we are able to manage risk together. I think that is the key to making money. That's my goal. It's super follows at Twitter, at Alpha Charts 365 on Twitter. There'll be a link down below as well. If you're interested, check that out. Okay, let's get to this video. SPX, Jay Powell had some words for the market, and the market did not like them. Big down day, elevated volume, obviously no bueno, right? Not good. Expectations here is that the market will continue lower. Now you have the rising 50-day not too far below. Everyone's talking about that. I would be shocked if it stops right there, like everyone's kind of talking about. I expect it maybe to go a little further, and then maybe you get some kind of bottoming pattern that way. Obviously, this is the next potential level right there, main level. We'd love to see it stop short, make a higher low, and you have a low here, and then potentially another higher low here. Suck in this 200-day, which is right on my trend line too. They're like almost overlapping right here. Have the 200-day come on down, maybe into this green area. Then we make a higher low here. We come back out, we chop around, and then we could break out above that 200-day, maybe when it gets down to this general area right over here. That would be my ideal situation, but market doesn't care what I think, but just keeping that out there. Market was down 3.37. In equal weight, it was down 3.22. So roughly the same, not too much difference. Looks about the same too. There's your rising 50-day right down here. There's your 200-day. And again, it may come down here and again, make that kind of inverse head and shoulder type bottoming pattern. Bottoms are a process. And look, something I've noticed, like on the RSP, lower volume, right? Huge down day, but did we see a giant volume spike like in here and even in here and even in here? No, very muted. And that's, I think, maybe the theme for today. Helps if I type it right. Here's the Qs. Again, huge volume down, rising 50-day, VWAP from the bottom, 295 to 300. This green area, that is what I am watching to hold. So there's your 50-day 303. My expectations is it's going to dip below that. There's your VWAP. Maybe it stops at the VWAP at 300, 301. Maybe it goes all the way down to 295, right? It's very possible, and why shouldn't it, right? But 295 is a big deal because that's this area right here. And I think that that's where it, for the bull case, it has to hold, right? And then you just have another higher low, even compared to here, right? It's still just another higher low at that point. And again, sucks in the 200-day, maybe pulls it down to the VWAP also from the top, or from the top-ish. You could call this the top. I don't know why I put it there. You can even call this the top, right? Something like that. Either way, this VWAP in this area, this 200-day would come down. Maybe this kind of comes down, tests this area down here, and moves back up. That is the bullish scenario. Obviously, if it breaks down from here, that would be the bearish case, of course. 4.1% down. That's no joke. So how did the equal weights do, you're asking, right? Well, 3.78, not quite as bad. And did we see gigantic volume? No, we didn't. Yeah, let me get rid of some of these other bars so we can actually see what it actually looked like. And look, it wasn't gigantic volume, right? Now you have your rising 50-day not too far away, and listen, my expectations is, with this type of move, it probably will break this 50-day and go lower. Again, just to suck in the 200 a little closer and hopefully chop around and then break out. Okay, that's what I would like it to do. Not that it's going to, but that's my bull case scenario. Bear case, obviously, it just keeps falling down. That's the bear case. We don't need to talk about that too much. IWM, again, 3.29%. Same thing. You got this pinch between the two moving averages with the other ones in between. No big deal. I do think that, again, it may fall lower, maybe to the 50-day, maybe a little bit underneath the 50-day. That would not be shocking. Down 3.29. Then IWO, of course, 3.48%. Again, higher volume, but nothing crazy or off the charts. And again, it may kind of get down to that 50-day right down here and then chop around, and that would make sense. 224, 225-ish. That'd be a nice spot for it to hold. We'll see if it does, right? We'll see if it does. But that would be that makes sense to me. And then there's your 200-day right there, not too far away, right? If it comes down here, chops down, this comes down to 242-ish or whatever, and then we could break out. That'd be pretty bullish, I think. Let's see where the 200-day on the IWO would be. Is it close to here? Yeah. So we're starting to get rid of these bars right here. So I expected acceleration down, right? That's my expectation. It's going to start to continue to go down, and it could take a couple weeks. And even if it does break out, it may take weeks or months for it to flatten out and turn back up, and that could be not an easy trading environment either. But with everything said and done, in the short term, I'm looking for this green area one way or the other to see what happens. And that'll be over the next probably week or two. Seasonably weak time of year, end of August, early September and October. Those are tough. Those are the hurricane months, right? I live in South Florida, right? If you're gonna get a hurricane, that's when you get the hurricane, right? So that markets are no different. Let's look at the mid caps just for fun. Mid caps got walloped at 3%. Again, volume was muted though, right? Like it wasn't like everyone's selling, if it's not nailed down, we're selling it, right? Yeah, it wasn't a nice bar, it was a bad bar, but so let's not get too bearish is my point. Again, I do expect more downside in the near term, but I think that maybe we could be in a bottoming process at right now. Okay. Let's go to the key ETFs, sector ETFs. XLF, of course, bearish engulfing, 3%, decent volume, nothing over the top. Looks like everything else. But if you're going to make an inverse head and shoulders, well, guess what? You can still come down some more, hit the 50-day-ish, right? Turn it, and now you have a beautiful inverse head and shoulders and finishing up this pattern. Is that going to happen? I don't know. Maybe it's starting to set up that way. We only know after the fact, but let's keep our options open, right? Again, I'm just gonna draw it in there just so you guys can see what I'm talking about, right? That's kind of what I'm talking about. All right, that's XLF, right? Let's look at SMH, maybe the most important one of the bunch, and I already drew that in. Okay, so let's see. I would like to see it start to create a bottom here, right? Maybe it comes out a little bit more, but I want to see this start to, create that bottom. Again, it's under the 50-day, a little bit weaker than the other ones. So would love to see this kind of lead on the way out. There's your 200-day coming into this green box. Again, that's an interesting spot. If it could come down to this neckline, 246, as this kind of rounds the corner, that'd be an awesome spot for it to break out. Again, we don't get to choose, but let's look at potential bullish case. Again, I drew this in a long time ago. I'll just adjust this a little bit, right? Because this is a real possibility. Okay. So SMH, again, short term, but maybe setting up for a long term. We don't know yet, right? So question marks. Same thing for transports, right? I mean, we can see this. So the pattern is exactly the same, and we're going across our entire economy right now, right? That's the point of my sector ETFs. Go across the economy. Right now, that's the potential we have. We don't know if this side will build out or not. And then housing, XHB, a little bit not as clear, but same idea. So we will see again what that looks like. Decent volume in housing. That shoe hasn't quite dropped yet, but it seems like it may be. So maybe this will lag the other ones a little bit. So as far as sector ETFs go, right? Those were, obviously they looked like the regular ETFs. When selling happens, everything kind of gets sold, but maybe things aren't as bad as they look, right? We won't know. All right, so let's go and look at under the hood and see if we can see trouble brewing structurally in the market. All right, so let's look at the VIX. We would expect a huge spike in the VIX, and yeah, we saw a spike, but we didn't see this, huge move. Yes, we saw a spike. Short term, next 30 days, volatility should increase, but that's what the charts told us as well. Still under this 27-ish area. That's a positive, right? If we could stop short of this area, or even under 28-ish, and then it could roll back over, that would be the positive, the bullish scenario. Continued upward pressure, that would be the bearish scenario. So right now, VIX, again, the move on Friday, for as much noise as we had, didn't make me too worried right now. So let's look at bond yields, right? Credit spreads. Okay, so we obviously want to avoid things that look like this. We've always talked about that. Avoid this. Well, we don't really have this, at least not yet, right? Is it the start? I don't know, maybe. Maybe some sort of head and shoulders top, right? We've been seeing the head and shoulder bottom in a lot of the indexes and ETFs and stuff like that. Well, we want to see head and shoulder tops in here. If that materializes, that would be, again, very, very bullish, right? So if this kind of rises maybe a little bit more, then kind of turns around, that would be, again, we don't know if this is the scenario. Sometimes I talk and, I need to draw it in. Is this what's going to happen? I don't know, but it's a possibility, right? It's a possibility. And then, right there, something like that, right? I don't know, maybe, but that's the bullish scenario, right? Again, we rip right through and make a new high. That's definitely the bearish scenario. So we're watching this. It's unknown, right? Unknown. Next up, let's look at put call ratio. Did everyone get bearish all at the same time or bullish? You know what? No, you're still in the middle, 1 foot in, 1 foot out. So that didn't happen, right? We don't have an extreme yet. I would love for it to get to extreme, right? I would love to, even some more pain for people to get very, very bearish. That may happen, right? That could happen very quickly. That could happen next week for all we know. We're not there yet though. So right now, 1 foot in the door, 1 foot out the door. Again, if we got up here and those head and shoulders are looking like they could, they start to turn, that would be awesome. What else? Percent of stocks above the 50-day. It gave back some, but it's still at 60%. Nothing that would make me overly concerned. Again, it is kind of a sharp move lower, so we're going to watch it. I like it to stay above 50% if it could, but during awesome bull runs, you see it dips down below 25%. Like these are great, overall pretty good times right over here, right? Overall pretty good times here, and we had spikes down, right? So spikes down here, spikes down here. So nothing that I'm, again, overly concerned about yet. All right. And let's look at Bitcoin one last bit. Again, let's see, there's a hold here in this 20,000-ish area, 19,000-ish area, and hold, or does it fall right through and this bear flag confirms? And and then here's a little bear flag right in here. And maybe it comes down to 19.2 or something like that. Does it confirm? Maybe make a higher low, or I'm sure there's probably an RSI divergence or something going on there. And then we move higher from there. I don't know, maybe. But right now it hasn't fallen apart. And I think that's that's gonna be the key message here. A lot of these daily markets, I look like, what's my overall theme? Like, this is the first time I'm looking at these charts with you guys. What's my theme? Things didn't fall apart. Yeah, they look like crap, but they didn't fall apart. Volume was muted on the equal weights. They were definitely muted on a lot of like stocks that I'm watching. Like everyone's watching Shockwave, right? So I'm not giving away any secrets here, and this is one that I own. But look, yeah, it gave back 2%, so less than the market, and volume was down on the day on the equity. Love it. Sell H, right? Another one. Again, I'm not giving away any goods here. Everyone's watching it. Yeah, it was down almost over 4.5%, but volume wasn't crazy high. So the leaders are not being sold off in the same way as the indexes. That's the message. Now, could they be starting next week? Yes, of course they could be. But as of right now, expect more pain. This is yellow light territory. If things stop out, we need to stay in cash until we know for sure what's going on. But I am cautiously optimistic that this is just part of the bottoming process. And market is pricing in all the news like it's supposed to. J-Pal gave us some more information yesterday. It's pricing it in, pulling this 200-day down. And I think that's the key. This is the bottoming process. And that's what I want it to be too, to be honest with you. And that's just one big bottom that's happening right here, right? Let's just go to the weekly real fast. Just one big bottom, never broke, never retested this area. Maybe we kind of did over here, but not really. Higher low. Technically, go to a monthly chart, right? And technically, that's just a retest of this area, higher low, and everything's okay. So that is my state of the market. State of the market is, light territory, unclear, but don't be too bearish at this point. I'm not looking probably to add anything, but anything stop out, I'm going to raise cash, but I'm not selling anything in a panic, because to me, we're not in panic territory yet. Now we break this green area and we move, when we start moving down through here, then yeah, that's a different story. This 295, that's important, but that's 3.5%. We'll call it 4% lower, right? So we're not talking about huge amounts at this point, right? So let's see what happens if and when it gets there, and then we could be more objective about it. Hope you all are doing good out there, staying safe. And don't forget, super follow me on Twitter. I really give you a ton of stuff all week long, way more than I even mentioned at the beginning of this video. So definitely check that out. I appreciate that. Y'all have a great day, and thanks for watching.